my view of like the history of technology, the technology that enables more people to express their creativity and build on top of it usually wins.
Hi, welcome to the This Week in FinTech podcast. I'll be your host today. I'm Justin Friedman. I'm a member of the TWIF team, and in particular, I lead policy at Stablecon, which is our preeminent gathering for the stablecoin ecosystem. I'm here with Bhau Kotecha of Paxos Labs. We're delighted to welcome you to the podcast. Thanks for making yourself available.
Thank you for having me. And as someone that started his career in FinTech, I remember when This Week in FinTech first started reporting and doing content, and I felt so seen, so excited to be here. And as I understand it, to be your first guest as a host of this podcast. So I'm honored.
That's right, Bhau. I've wanted to host a podcast for a while. I love asking questions. I'm a former regulator, so I'm naturally curious about what people are building in the ecosystem. And you have the honor and privilege, or misfortune, we'll see, of being my very first podcast guest.
Thank you. It's great to be here.
So you have started a new venture under the auspices of Paxos. Many of our listeners will be familiar with Paxos, but the general ecosystem out there, maybe not so much. Paxos is an infrastructure provider, not a household name. So I'd like to give you an opportunity to first introduce yourself and Paxos, and then tell us about Paxos Labs.
Yeah, sure thing. It's great to meet everyone. And again, really excited to be here. Bhau Kotecha, great to meet you all. I lead our Paxos Labs team. Before we spun out Paxos Labs, which I'll get to more of in a second, I spent 3.5 years at Paxos, which, as Justin mentioned, is a blockchain infrastructure provider. And really, Paxos's business has focused on two core areas over the years. So one is tokenized asset issuance, right? So Paxos has been the issuer of PayPal stablecoin, most recently issued USDG, which is a consortium stablecoin backed by the likes of Kraken, Robinhood, and others, and has also issued things like tokenized gold, PaxG, which is also having its moment right now. And on the other side of the business, there is kind of an infrastructure offering, right? And so one of the pieces of infrastructure here is trading infrastructure as a service. So if you go on your Venmo app today and buy Bitcoin, it's actually powered by Paxos's trading and custody infrastructure. In addition to that, there is as part of the infrastructure business, there is an orchestration money movement business. And in addition to that, Paxos recently acquired Fortify, which is a institutional wallet provider. And so that is part of kind of the infrastructure offering as well. That's kind of the background on Paxos. And then happy to pause there for any thoughts you have, and then can talk a little about Paxos Labs.
Yeah, well, I'll just say you're starting from a really strong position here. You know, Paxos is such a key name in this ecosystem and has powered so many solutions kind of in the background and maybe doesn't get enough credit. I'll just say, you know, having worked at the New York State Department of Financial Services, which initially licensed and chartered Paxos to provide that infrastructure to this industry, you know, they've been such a key partner in powering so many solutions that people depend on, that they're experimenting in this ecosystem and building tokenization and stablecoin issuance. And so I think that you start with a tremendous amount of credibility to now take it to the next level.
Yeah, definitely. And you know, that's kind of been Paxos's MO from the start, right? We're going to do things the right way, even if it's not the fastest path or the quickest path. It's like, let's do things the right way. And that includes, you know, working with NYDFS, working with regulators around the world, including in Singapore and Europe, and then most recently working with the OCC. And so Paxos has always taken that path, and you know, it's been a core part of the Paxos DNA. You know, and maybe it's helpful if I go into Paxos Labs to go into kind of like the journey that got us to Paxos Labs and why we decided to start.
Yeah, well, tell us why we need a Paxos Labs.
Yeah, totally. And so maybe something that can help a little bit, and I can share a little bit of my background before Paxos, and that kind of leads into it. So as I mentioned, I started my career in FinTech, and this was like really FinTech 1.0. And so again, like when This Week in FinTech came out, I felt very seen. But I started at Square and Cash App, and it was a fascinating time to be working in FinTech. That was really the first wave of FinTech companies, and you could really see the change that was happening for how customers were being served with financial products in a different way. After about 6 years there, I started to really understand, hey, like the front end is getting better, the experience is getting better, but it's built on the same kind of traditional financial stack, right? And as the consumer experience was getting better, especially in the United States, what I was seeing was a lot of the pain of the financial system, the existing financial system, was being internalized by these companies like the fintechs, right? And so something that like my head really started to spin on, and I want to say like late 2018 was, like crypto is really taking off. Stablecoins were starting to become a thing then. What role do kind of like these new assets play in kind of fintech 2.0 maybe, right? And it became very clear to me that the next wave of fintech, the next wave of financial institutions were going to be built on these new rails. And around that time is when early 2022, late 2021, I got a chance to meet the Paxos team. And I think they very much saw the world evolving that way, right? How do you serve the large platforms of today and help them re-platform their backend? How do we help them build on a more modern financial infrastructure and serve their consumers that way? I always believe like there are some really cool consumer use cases in crypto for sure, direct to consumer use cases. But my thesis, even for my days at Square, was like, well, the backend is going to get replatformed and the consumer may not know, or the small businesses may not even know. And so I think what I learned and saw about Paxos was very compelling. And, I got to go spend 3.5 years at Paxos building out different products across the business, both on the crypto brokerage as a service product, but also helped launch multiple stablecoins, worked on the PYUSD launch, worked on USDG, USDL, which is our yield-bearing stablecoin. And one of the things we started to talk about at Paxos was it's very clear where enterprises take their first step into crypto. It's one of two places, more or less. It's start with stablecoins, right? Integrate stablecoins, do stablecoin payments, and or start with trading, right? Enable their users to buy, hold, sell Bitcoin, right? And that was kind of the time and time again, the first step that a lot of enterprises took, right? And I think Paxos has done a great job building a business there. It has some of the largest names in the world using Paxos infrastructure to start them on their blockchain or crypto journey. One of the things we started to talk about was like, what comes next, right? What do a lot of these enterprises want to do? What are the things that they will want to enable once they take this first step? And for people that have been in crypto for a while, know like, hey, like just getting access to digital assets is kind of like day one, right? You get a stable coin, you get Bitcoin, you get ETH, but you want to do things with those assets after. You want to earn yield, you want to trade, you want to borrow against them. And so a lot of what we kind of looked ahead to was as these enterprises take kind of these initial steps on their journey, they're going to want to do more things on chain. How can we start to build these on-chain financial experiences and integrate them back into kind of an enterprise-grade stack like Paxos has? And so, I think the opportunity that Paxos has in front of it is massive. But we wanted to go explore this area of the ecosystem and start to build truly kind of like on-chain protocol-type products. And so that's where we decided to make the investment in spinning out a new entity, Paxos Labs, and building out a small team. We're about a team of 12 now. That's really focused on building specifically in this space, which is on-chain financial services that can help enterprises take that kind of next step on-chain once they start with Paxos.
So if I could borrow a phrase from Shania Twain, so you've got a stable coin. That don't impress me much.
Exactly.
What are you going to do with it?
Exactly. I think that's spot on. And it's so interesting because obviously it's been such a, hot 2 years for stablecoins, and everyone wants to talk stablecoins. Everyone wants to get started with them. And I think that's awesome. Like, it's great to see that momentum. But a lot of the conversations I have with these enterprise customers, it's like, well, what's your plan after? And it's kind of like, oh, well, I hadn't thought that far yet, right? And so we view our role as saying like, hey, like we can help shepherd you through this like entire journey because there's so much more you can do. It's not just an asset. It's a new platform that you can enable an entire set of services on top of for your consumers. And that's what gets us really excited.
So, Bhau, tell me, what's your favorite use case so far?
Yeah, I think there's a lot of really interesting ones out there. If I had to pick maybe one or two, one I can share that we just kind of shared publicly today is privacy-enabled payroll use cases. So, we've partnered with Toku and Alio, where Toku is a payroll provider, a stablecoin payroll provider. Alio is a privacy-enabled blockchain. And we've actually helped Alio create their own stablecoin, USAD, which has privacy-enabling features, which together with Toku, we can actually enable people to sign up to get paid via stablecoins in a privacy enabled way. So I think all these pieces coming together to create kind of a unique use case of like, hey, how do I get paid in stablecoins? But maybe the whole world doesn't need to know how much I get paid, right? And so I think some of these like pieces are coming together to create unique use cases. I think there's some stuff I've seen around kind of streaming payroll or streaming subscriptions, right? Like, hey, like, I've used 3 days worth of this service, or I've worked for 3 days. How do I kind of get that streamed to me instead of kind of a 2-week cycle or a month-long cycle? So some of those use cases are really interesting to me. And I'm sure people will come up with even more innovative things as kind of they realize these are building blocks and kind of pieces they can fit together in different ways, and not a single set of solutions.
I do think the privacy question is a big one, and it's potentially a barrier to mainstream adoption for stablecoins as a method of payment, as a store of value. Look, in the Stone Age, people transacted in cash and there was complete privacy, right? And then we moved to bank accounts and there was less privacy, but still some. And we introduced credit cards and debit cards, and the companies that are providing the infrastructure, they may know things about your transactions, but the general public doesn't. And then we get Cash App and Venmo, and there are some social features embedded, particularly in Venmo, that allow people to share their transactions if they choose to. And finally, we're in the blockchain era, and blockchains can be completely open and transparent and everything is recorded to a public blockchain, or we can layer on privacy features. And, I'm hearing a lot of conversation these days about how do we embed privacy in ways that preserve security, preserve personal privacy, provide protection for institutions that maybe don't want to telegraph the ways they're moving money around the world, but also meet imperatives around anti-money laundering and other ways of fighting illicit finance. So how do you think about those issues, and how do you solve for that while providing solutions that actually meet the marketplace where it is today?
Yeah, definitely. And I think you kind of got it exactly, of like the balance that all these kind of privacy solutions are trying to enable, right? Consumers and businesses want to have some level of privacy on their transactions for a variety of reasons, right? Personal preference all the way to like, hey, it is a risk to my business if I telegraph these things, right? And so I think we need to find a solution there if crypto and stable coins are going to become a primary rail for global money movement. But the things you flagged are very important, right? Like kind of adhering to anti-money laundering, adhering to sanctions laws, like all those things are really important. And so the best kind of steps I've seen towards this are providers that are trying to create a system, either it's a technology solution or a set of processes where law enforcement can programmatically ask for things to be kind of like unveiled, right? When they have a reason to kind of investigate certain transactions, these solutions should have kind of that option to say, hey, like in these scenarios, we do have to actually unveil what happened underneath the hood on that transaction. And look, some people might not love that, especially like I think in the crypto world, people are might not appreciate that there's like kind of like a back door for law enforcement to come in and look at things. But I think we're going to have to do that. I think we're going to have to create this like balance of, hey, we can work with the set of laws and regulations that are necessary to make sure that the world is operating in a safe, compliant way. But people and businesses deserve some level of privacy. And so I think there's a happy medium we can strike here. We're still very early. But I think there's certain providers that are taking the right steps towards that.
Cool. So I'd love to know more about Paxos Labs. Who is the customer for Paxos Labs? Is it Paxos customers and you're providing an additional suite of services? Is it a new customer? And how are you approaching things either the same or different than Paxos has?
Yeah, I would say the Paxos Labs customer is any platform that already has integrated stablecoins or digital assets, right? This is very much what we were talking about earlier. We want to take you on the journey that's after that, right? So in some cases, they're Paxos customers. In some cases, they're not, right? And we're stablecoin or infrastructure agnostic. Hey, if you work with Circle or Tether, we'll still work with you on some of the products we're looking at. Our kind of position is very much, hey, you've started this journey. Let us help you build products and like financial solutions on top of that, right? And so Right now, where we're spending the most time with customers is folks that have already enabled stablecoins, right? And now want to enable some form of stablecoin lending, right? They want to say, hey, I want to enable my users to actually lend out these stablecoins directly into DeFi and earn yield on them. We're helping these customers do everything from get set up with the right wallet solution all the way through to set the kind of policy guardrails that they care about. They might say, hey, I want kind of really low risk, only allow borrowers to put up blue chip collateral. They can really program or configure exactly what they want to expose to their end users. We help them set that up, and then we actually help them do the deployments directly into on-chain markets, right? The second use case we're having conversations on are platforms that currently offer digital assets like Bitcoin or ETH, and they want to enable their users to borrow against them, right? And that's kind of a increasingly asked for use case that we're hearing about. And so that's kind of where we're starting today, really kind of some of these lend borrow basic use cases. But our goal very much is to say, hey, like everything you might want to do with digital assets on chain, we can help you do that in a safe way that is kind of enterprise friendly. You can put your kind of walled garden up and make sure you're offering the experience that you want to offer, abstract away some of the complexity for the end users so they're not going and having to interact with DeFi directly, and have it happen all within your platform, right? Because I think it's not just this is a great solution for the users. Something that platforms worry about a lot is like, okay, I offer stablecoins now, but my users want to go do things with them, and right now they're taking it off my platform, right? As a fintech platform or a financial platform, that is like the number one metric you're usually track, right? Is inflows versus outflows, right? And so this is a very kind of existential question for a lot of these platforms where it's like, hey, great, adding stablecoins and crypto increased inflows, but I'm actually seeing all of it go out now because I don't let my users do anything with it, right? So I think this ends up being a really big problem, especially as more and more users adopt crypto within these platforms.
Yeah, it's a question I ask often, particularly of founders who are at the beginning of their journey of building a business, and they say, we want to issue a stablecoin, we want to tokenize assets. And I ask them why, right? What are you trying to accomplish? And if it's for your own purposes or it's for a customer, are you helping them build a moat? Are you helping them retain users or customers? Are you embedding this in a loyalty solution? How are you keeping that value within your ecosystem rather than making it easier for them to move value off ramp and take it elsewhere?
Yeah, and this is exactly right. And I think a lot of my experience at Cash App taught me this, right? Every Monday morning, we would get in a room with the Cash App executive team, and we would look at 4 metrics every Monday morning. How is acquisition doing? Retention, engagement, monetization. Those are the 4 things that the platform really cared about. Are we acquiring new users? Are we keeping the users we have? Are we engaging existing users? And are we monetizing that engagement, right? And that was a very clear framework for me to see and learn, oh, this is actually how a lot of financial institutions think about their platform in general, right? And so if you can go build products that draw very clear lines to, I help you drive acquisition of new customers, I help you retain your existing ones, I help you engage your existing customers, and I help create new monetization revenue lines, I think that ends up being something that resonates very clearly with these platforms. Look, some people are like, oh, tokenization is cool, I want to do it. But a much more powerful story is I can help you drive the things that matter for your business, and also tokenization is cool, right? And so that's been something that's been resonating, at least with our customers.
Yeah, there's a risk of tokenization for the sake of tokenization.
Totally, totally.
So how do you help your customers think through the economics? I mean, sometimes the technology is cool and it would be additive and exciting and attract users and interest and buzz, but it might actually kill your economics. And so how do you work with customers to make sure that this is something that's actually going to enhance their bottom line?
Yeah, and I think it's a little bit of showing them this journey, right? Someone might look at, hey, if I had stablecoins in a vacuum to my app, for whatever reason, if the inbound or the inflow balance changes, my monetization profile changes. And when you look at things in kind of like a single stage step, right, it might be like, oh, you might actually be losing economics on that. I don't know. It depends on your platform. Often, for what it's worth, adding stablecoins improves economics for most platforms because they're going from not really monetizing their balances to monetizing them. But let's just say even that first step, maybe they're coming out neutral or they're losing some economics. what we help them see is like, hey, again, stablecoins are the first step of your journey, right? You're going to add stablecoins, and then you're actually going to offer lending, borrowing, swaps. And actually through our suite, one of the things that we've been working on is this concept of distributor codes, right? That actually, with the platforms we integrate with and all the revenue that we generate through the on-chain actions, whether it's from lending protocols, borrowing protocols, swaps, etc., we're actually sharing that revenue back with the distributor, right? So we're actually showing them this picture that, hey, like, yes, you're monetizing what's on platform, but these actions that are actually happening off of your platform on these on-chain protocols, you can actually monetize that too, right? And that's part of kind of the set of partnerships that we strike and ultimately go share revenue back with our partners. And so you have to take them on that journey and help them understand the entire suite of things that they're going to do with digital assets and not just kind of that first step.
So is there something special about Paxos and the Paxos universe that, offers some kind of value add? I mean, there are a lot of self-serve options out there. I mean, today I could spin up a stablecoin literally in one day, and I don't need Paxos or Paxos Labs to help me do it. But is that going to allow me to tap the benefits of network effects?
Look, yeah, I think maybe I'll share an anecdote after this, but you're right. Like, look, anyone can go spin up a stable coin potentially. You're at NYDFS, there's like some rules around like, hey, like, well, you actually have to have the reserve somewhere, and so not everyone can go launch a regulated stable coin, let's say, right?
I didn't say I could spin up a fully compliant stablecoin in one day, but I could spin up a stablecoin in one day.
You can spin up a stablecoin, so totally. You can go do that. I think there is, to really scale a stablecoin and get the network effects, there is a level of investment that is required that I believe probably only a handful of companies in the world have the resources and reach to do it. If you look at someone like PayPal, I think, which, by the way, PYUSD I feel like is really reaching its kind of like escape velocity now. I think nearly $4 billion of market cap. But it took them a few years to get there, right? And they're obviously one of our customers, but it takes time and investment and a lot of hard work to really get there. And obviously, PayPal has the resources, and honestly, PayPal is the largest two-sided market in the world of merchants and consumers, right? And so it's like, yeah, you can go do it. It's very hard to scale. Only a handful of companies in the world, I think, will do a good job of it. That's where I think something like USDG is really interesting, which is the consortium stablecoin issued by Paxos as well. There's a reason why the likes of Kraken and OKX and Robinhood have chosen to go that route. I mean, look, Kraken they could totally do their own stablecoin, right? They're a massive platform. But I think people are starting to see it's like, actually, it's better to kind of own a piece of a large network with many nodes versus, own all of a small network with one node, right? So I think there's that piece of it. From like the Paxos and Paxos Labs value add standpoint, right? There's this really interesting time when I first joined Square. Again, like kind of a tangential anecdote. Square started with the little card reader, right? That you put on your phone and swipe the card, and it was kind of this thing where like, we were like, these things are selling like crazy. People can just go get it at Best Buy or order it online. Like, we're never going to need a sales team. We're never going to need an enterprise integration team. We were very wrong. I then spent the next few years of my career at Square building out the sales org. And what we learned was even kind of the 2-location mom and pop shop still wanted a phone call, still wanted some guidance. And as you scale that up to like the largest enterprises in the world, they don't really just pick up things and start building them. They really want some level of white glove service and guidance, especially in something like crypto where it's so new, there's so few experts. They want a set of experts guiding them end to end, right? And if you look at kind of the Paxos plus Fortify plus Paxos Lab stack, Paxos has been issuing stablecoins for really longer than almost anyone, and tokenized assets. Paxos can offer you crypto trading. Fortify can offer you wallet solutions, and Paxos Labs can offer you connectivity to on-chain products. And that stack and getting it in kind of a really an enterprise-grade way, in a professional way, I think is the real value add. And helping companies integrate it the way they want to is really important. Yeah, all the pieces are there. People could try to go do this themselves. I think it's very hard. And if you add on the regulatory piece, it becomes quite a mountain to climb for anyone to replicate it from the ground up.
Yeah, the build or buy question confronts customers at all levels, right? From the earliest stage startup to the most mature commercial company out there. And it's really a question of, is this thing we're going to build our superpower? Is this the thing that is going to differentiate us? Or is this just infrastructure? Is this just a tool that's going to enable us to do the thing that we do best? So when companies come to you and they're saying, look, we have expertise, we have a compliance team, we have developers, we can do most of this on our own, we're just trying to plug into your network, but like we can do the technology part ourselves. Like, what's your answer to that?
I think it's hard to decouple the network and the technology, right? But at the end of the day, we do want to support customers in whatever they're looking to build. I think we often have customers say that, and we say, great, we're happy to work with you in whatever way works best. But once they start to learn about all the layers that go into actually maintaining and building and running these products, they actually come back and say, you know what, actually, we would just like to use your infrastructure. I think that's one piece. But the second piece, I think this was something that Microsoft has always said, right? To be a great platform, you actually want your customers making more money than you on any given integration, right? I think Satya Nadella said this, or maybe it was someone before that, but this concept of, it's great that our customers are making a lot of money on these products. That's what we want, right? We're trying to operate at scale and be an infrastructure provider across kind of the entire set of kind of blockchain products. And the thing I sell to them is like, hey, we can help you make this great, and you're actually going to make this a massive revenue line for you without the headache of setting up the infrastructure, right? And so I think a lot of times people think about this kind of like fully vertical integration, but when they really open up the hood, they kind of themselves back away and they're like, I don't think that's worth it for us, right?
So some of the most challenging customers to serve are financial institutions, right? In particular, securities firms, broker-dealers, insured depository institutions, that's banks and credit unions. And I'm curious how you approach stablecoin integrations in particular. There are so many out there that I call the stable curious. Bankers that see changes coming, they know that stablecoins and tokenization of real world assets are going to become essential financial tools going forward. They're not sure what's in it for them, how they can better serve their customers, their users. So what are the considerations for a financial institution that is stable curious?
Yeah, definitely. So I think one is understanding how easy it is to get started with pilots, right? We've done like really small internal pilots. We've done like, hey, a pilot just for you to move around your corporate treasury in one country, right? Like there's so many like little ways to get started that you can kind of like dip your toes in the water and you have to like, dive bomb in. So I think that's one piece. The perspective that really, I think, captures the attention a lot of the financial institutions we talk to is they very much understand the concept of monetizing on platform balances. Cash or assets that sit in their custody, they understand the model of how you monetize that. You lend it out, you charge service fees, whatever. I think the thing that people don't fully understand is with some of these tokenized asset models, you can actually start to generate revenue even when the asset sits outside of your ecosystem, right? So if you look at PayPal stablecoin, PayPal, there's like, however many, couple $1 billion of PayPal stablecoins sitting on DeFi exchanges, right? Or DeFi protocols. PayPal's actually turning those dollars into a revenue line item for them, and not just the dollars that are sitting on PayPal or Venmo, right? And so I think that is kind of like the mindset shift where it's like, actually, I want to monetize the assets that ever flow through my ecosystem and not just the ones that are sitting there at any given time. So I think that's one. And then two, like, I think one thing that I've seen, and maybe this is like a little bit of a critique on the broader crypto ecosystem, is you have to be patient, right? The financial institutions don't move at the speed of a small crypto company. They have a much higher degree of compliance requirements, regulatory requirements. You have to be patient and you have to really spend the time to educate them. There are, financial institutions we've been talking to for 2, 3, 4, 5 years and still haven't launched anything. But that's okay. You have to have kind of a very patient mindset of being an educator and a partner where you can be. And I think, eventually they're all going to get there. I think in the world of quick wins in crypto, it's very hard to take that view. We're like, hey, like this customer might take 3 years to get live, but it's a worthwhile investment. And so I don't think a lot of companies or organizations are really set up like that, specifically in crypto, but also probably in general.
Do you talk much with smaller banks, community banks, or regional banks that maybe are looking at these changes in the marketplace and wondering, is the on-chain economy going to replace checking accounts and savings accounts? Is it going to result in deposit flight out of, off of our balance sheets? How do you talk to them about how to evolve into the next century and continue to serve the very important roles that they do in terms of providing, safe shelter for people's nest eggs, in terms of generating credit?
Yeah. So it is interesting. The smaller banks, smaller financial institutions, especially in international markets, are very curious and are actually surprisingly forward thinking, and they're seeing some of these things. Again, like I think understanding market by market regulatory requirements is kind of a task in itself, and it's something we work with clients on. But one of the things, I like to think about with these clients is generally their goal is to be able to serve their current customers and more customers really well. And when you frame it in that, where it's like, hey, we can actually help you and your customers move money for cheaper. Oh, we can actually help you originate loans for cheaper. Like you actually take them through the line items and say, I can help you do these things at a lower rate, faster for more customers, for really any business that like adds up. And I would say a lot of these smaller financial institutions, in some ways, are almost more connected to their users or their customers, right? Where they do have a genuine desire to serve them better. And so a lot of times that really resonates. We often see kind of, that's one category of customer that is like genuinely pursuing kind of like a better product for their users. But there's kind of like two other categories that we see, and it's usually like either they're motivated by fear, because it's like, hey, I'm going to lose and like everything is going to like flow out of my ecosystem, or they're motivated by greed, right? And so there's different ways you can go talk to them and say, hey, like this is like a new revenue line.
The classic dichotomy in finance.
Yeah, exactly. And so it's pretty consistent. We see the group split down that, and there either side has a case as to like, hey, if you don't pay attention to this thing, and if you don't at least start experimenting with it and starting to do some pilots, like you will fall behind. And again, like you'll fall behind and you'll lose, or you'll fall behind and not make as much money. And either of them tend to be like strong arguments depending who you're talking to.
So currently there's really a debate raging in the banking industry about stablecoins or tokenized deposits. And I'm curious, if you look ahead 5-10 years from now, is one of these technologies going to be ubiquitous and we will have forgotten about the other, or can they coexist?
I'm probably a little biased here, given my background, but I have a hard time seeing a world where it's not stablecoins that are ubiquitous. And the reason is stablecoins, at least in my mind, how they're defined versus a tokenized deposit, do enable people to build on them openly, right? In the sense that, hey, if I'm a developer in Argentina or in whatever country, I can actually build a neobank or a product around PYUSD or USDG or USDC. And I think especially in a world with AI and like everyone is kind of building, having open, permissionless, composable assets, I think that like we have a hard time imagining the network effects of like the building that happens around them. When you have closed, permissioned, non-composable assets, right, where I can't actually go build products on top of them, they will never be able to compete with like the network effects of the innovation that happens on the open asset. And so, look, I think tokenized deposits will have their role, but just in my view of like the history of technology, the technology that enables more people to express their creativity and build on top of it usually wins. And so that's kind of how I see it. But maybe we can catch up again in 5 years and do a retro.
Yeah, I'd like that. When I think about the question of interoperability, I come back to first principles and I think about cash, right? The most interoperable tool that ever existed in financial services. Sovereign-backed legal tender is totally exchangeable and recognizable by all operators in the economy. And you're only limited by your ability to carry as much cash as you need to engage in the transaction. So obviously, when we go digital, you abstract away from those physical constraints, but we start introducing questions about interoperability and whether those are technology driven or they're moats that people have built, or they're simply just a lack of understanding in how these things can be integrated. Those are real issues. And so, I've heard you use the term off-platform dollar economics. And I'm curious how that intersects with this question of interoperability and the desire to build solutions that actually provide the flexibility that users want, but allow the issuer or the sponsor or whoever your customer is to maintain their stake and their interest and continue to provide value.
Yeah, it's a really good question. I'm not sure how it will play out, but one of the things I think about is, well, how does interoperability between the US dollar and euros work today, right? Essentially, there's like a liquidity pool, like to use like a maybe like a crypto-y term. There's like a liquidity pool of like dollars on one side and euros on the other side, and someone's willing to facilitate that trade, right? And we kind of have enough liquidity built up on both sides of these different pairs that this trading can happen. So now if we move to the digital world, right, we have a massive supply now of tokenized US dollars, right? I think whatever, 200 billion or whatever it's approaching. We don't have a huge supply of tokenized other currencies, right? And so there really can't be a liquidity pool today. So it is actually not interoperable. And so now the question becomes, do these liquidity pools build up over time, and who builds them, right? Are they governments? Are they local service providers? Because there are FX desks in each of these countries that you can go to and say like, hey, I want to exchange this. And it's like a local operation that's running this flow. Does it work that way? Or do you actually end up getting multi-currency asset issuers, right, that actually enable atomic swapping? So if you imagine issuer in the United States issues a US dollar stablecoin, but also has an entity in Europe that issues a tokenized euro, and they own both bank accounts. Actually, now instead of having a dollar and a euro on both sides to enable the swap, I could actually say, hey, I have a dollar, Mr. Issuer. Can I swap into your euro? And that issuer may actually be able to atomically enable that swap and say, great, I'm going to mint a euro for you. Here you go. And then you give me the dollar and I'll handle all the back end movements, right, of moving that dollar into euros and back into my bank account. And so that could be a really interesting angle. We're so early in the issuance game still, like really early. So I don't know how it'll play out, but I could envision a world where there are a handful of issuers that have kind of set up issuance entities across the world and can enable this kind of like atomic swapping, which is, by the way, the most efficient way to do FX, right? Because you don't actually have someone fronting the money on both sides of the liquidity pool. You're doing it atomically. And so I don't know how it'll play out, but that's kind of like one hypothesis I have on how it could go.
One of the big questions as we look ahead to the future is, are US dollar denominated stablecoins going to become ubiquitous around the world? The US dollar has been the world's reserve currency for a long time. Is that going to carry forward in the on-chain world? Or is there going to, emerge that liquidity that you're looking for in other currencies? And are we just going to see a seamless transition of the status quo into an on-chain world where we have issuance in every currency around the world and easy interoperability? Or is it an inevitable push into the US dollar? And what does that mean for the global economy?
Yeah. So I think the answer is it really will depend on how encouraging the regulatory and innovation environments of other countries are and other currencies. If I were, running some country that had a non-US dollar stable currency, I would be trying to find a way to make sure that we're getting investment into a tokenized version of our currency and starting to build up that liquidity, so we don't get crowded out by the US dollar version of it, right? Right now, I think tokenized US dollars are a little bit of a runaway train, and they're picking up momentum and steam and network effects. So if I was kind of a proponent of non-US dollar currencies, I'd say like, hey, we have to build tokenized currencies of other things. Otherwise, we're really going to get crowded out by this asset. Now, if I was a proponent of US dollars, if I was the US government, I'd be trying to pour fuel on this fire and say, hey, this is a way to even further our lead as the world's reserve currency. And so I think it's going to be very interesting. So, if I was the US government, I'd pour fuel on the fire, grow, grow, grow. If I was, a proponent of another currency, I would say, hey, like we need to make sure that we're building our own versions of this. Because the other way to do it, if you're a regulator in another country, is ban US dollar stablecoins, right? And say, we're not going to allow it. I think that's a very blunt instrument to use. You could, and in my experience, what I've seen is like limiting innovation only is bad for places over a period of time. And so how can you be pro-innovation and invest in companies, teams, people, regulators that want to make it happen? Versus living in this world of fear of like the US dollar is going to come eat us, right? So TBD on how it shakes out, but that's kind of how I think about it, depending on what side you're on.
All right, last question for you, Bhau. What's the problem that tokenization can solve that we've never been able to solve before?
Yeah, so I get asked this a lot, like in different flavors, in different forms, and or at least I hear this question asked, if not to me, in other forums, right? And the temptation is always to answer this in the sense of like, it's faster, it's cheaper, it's it's more accessible, right? All true. I think those are all true. I think it's all great. I think the thing that really, really has always captured my attention about tokenization is that you're turning financial assets into composable software and not just making them faster. And I think that is a very, very novel thing, because software is relatively novel, right? Like how long have we had software? 30 years, 40 years? But I think really having this ability to build programmable solutions on top of financial assets. And today we're just really on dollars, but imagine all the other things that will get tokenized and the kind of permutations of products that we'll build around them. And so I think that has such massive potential that I think most people probably haven't wrapped their heads around. And that's what gets me the most excited. Faster, cheaper, more access is amazing, great. I think the composability and turning financial assets into software is the really interesting piece for me and the thing I'm keeping an eye on.
All right, Bhau Kotecha, co-founder of Paxos Labs. Thanks for spending some time with us. If folks want to follow you on social media, where can they find you?
I'm just at Bhau, Bhau, followed by 3 underscores. And then you could also follow us at Paxos Labs on Twitter, and you can also find us on LinkedIn. Thank you so much, Justin. It was great to be here. You did a great job. First-time host, crushed it.
Thank you. And you're an experienced guest, so I take that as high praise.
Definitely.